Cool. How's it going? So, just wanted to record a video for today and talk about how trading isn't always perfect. There's not. Sometimes you can have the most brilliant idea on a trade and get stopped out and price goes your way. So, let's just break down today's trade. Today is the 31st of May, and this is Euro USD. And overall, we are pulling back. We had a 4-hour leg over here to the upside, and then price pulled back to the discount area, had an attempt on the highs, failed to break the highs, had a deeper pullback into discount, and from there on Thursday being yesterday, we rallied upwards. Now, on Wednesday, we had a push downwards. It gave us our last 15-minute range, our 15-minute bearish range. And coming into, where was it? It was yesterday morning, coming into London. And there was actually a really good opportunity presented after price had taken the Tokyo lows. And so you got this impulse to the upside, retracement to the order block, price then pushing higher, giving that retracement to the premium. And yesterday missed this opportunity. I'd only got to the charts. So this first hour or so is Frankfurt. London only opens 9 o'clock South African time. So unfortunately missed that position. So that would have been a really good one. Easy 1 to 5 played out. Generally I aim for a 1 to 5 target. If I'm counter trend and I'm taking a quick scalp, probably looking for about a 1 to 3. So there was an opportunity there to the upside. I think maybe like a 1 to 10 or something like played like that. And when I say 1 to 10, 1 to 5, that's a risk to reward. And so I'm risking a certain amount and then I'm looking to make a multiple of that. So that could be, if I'm risking 0.5%, I'm looking to make 2.5%. Or if it's a 1 to 10, which I don't really go for, but in that case, it would be looking to risk, say, 0.5% and looking to make 5%. Coming into New York, so generally my play for yesterday was this idea that price had made this bearish impulse to the downside with the slowdown in price, and then that gives us our 15-minute range. So when we're in the discount region, we want to buy. When we're in the premium, we want to sell. So you want to buy low, sell high. So the idea was that price needs to at some point retrace. Once it took the structure to the upside, that's clear sign that it wants to retrace. You can expect price to push up into this area. Obviously, you've got your different areas of interest or points of interest. And price came into it yesterday. I'd said to a buddy of mine that I was looking for a short from this area over here. And I would only enter should price provide me with an entry drill or meet my entry criteria. And for me, that would have looked like price coming into, so let's say price dances around here. This is a terrible color. Comes like that into the block, breaks the structural point, and then I'll take it off an order block lower. Let's get a different color on that. There we go. And then I'd take an entry off an order block that left. So that's what I'd look for, where price starts to engineer liquidity to the upside and then proceeds to take the liquidity, break the structural low down here, and then upon an order block, I'd want to enter. So that was the sort of criteria that I was looking for, and it didn't present itself, so I didn't take the trade. Overnight, price pushed down, as life would have it. Coming into Tokyo this morning, we see that it took structural low. We had this impulse to the downside, and so it pretty much spent the whole session selling off, right? Taking liquidity from the New York session just below here and leaving these relative equal lows. Okay, so I do have this set as a target. So that liquidity is taken, not really worried about it. And then there's also this trend line liquidity chilling somewhere here. So all these points, or majority of these points, could get taken. Overall, I do see price coming even lower. There's another 1 hour zone just down the side. So I do see price coming lower. We're going to have to see when that happens. I don't know. But coming into today and the start, so like I said, the first hour is actually just Frankfurt. So London only opens at 9 a.m. South African time. So over here. And so coming into this session, you see there's the Asia low down here and price breaks to the upside. So there's this, even if you look at this as a range, so you get this bearish range over here, you still want to retrace to the premium. Okay, so that's the thought process we've got to have here. So over here, price has this last point here. It fails to break the low, takes the high. Sure, it hasn't broken that last structural point. And price sells off. Now you can see this as the early sellers. They break the last structural low. So this point over here, it breaks it. Then coming into Frankfurt, this gets taken, ultimately breaking the structure to the left, that last down leg there, structural leg, whatever you want to call it. Price pushes up and then leaves this order block, right? Meets criteria for an order block. So I had my entry there. Entered on a limit order, which in hindsight probably wasn't the best idea, because I was watching this and the aggressiveness of price coming into the order block, and it's only a 3 pip stop loss. It's not like it's the world's biggest stop loss and giving the most amount of room for price to turn around. It didn't. It didn't turn around fast enough. And yeah, unfortunate, but that's what it is. That's what trading's like sometimes. You can have all the entry criteria. Overall, I wanted price to get back into that premium to then go to a further upside order block. And this is what I was seeing. Like overall, I expect the market bearish, but we cannot be predictors of the market. We've really just got to be reactors. And when we see something happening in the market, we've got to react to it in line with the principles, in line with our criteria. So in line with the ways that you view the market, you've got to react accordingly. So for me, for price to get to this premium, I expected an extension past this premium range, right? So the premium being this area of the range, because when price drops, you want a better price to sell from. Okay, you never want to sell low. You want to sell high. So if you're buying low, selling high, that's pretty much the aim. So I expected price to push up into this region. Now, the liquidity sitting here at these double tops and the session highs, I expected price to run it. I expected price to push through. And so I didn't mind having a stop loss just above. And with this position, with the momentum and the aggressiveness of price retracing, it unfortunately ran the order block, took me out by half a pip, and then proceeded to play out. So it played out in the next hour and a half after, well, about an hour after I had placed the position. Did I say that right? Yeah, the trade took about an hour and a half in total. So that's it. Just keep working on strategy. Sometimes the market does its thing and will wick you out of positions. This was a very easy 5-hour trade. I followed the correct criteria. I followed my strategy, and this was just one of those unfortunate things. But remember that the next profitable trade is around the corner. You can't control what the market does. Only thing you can control is your risk. So look after that. Take care, guys, and I'll catch you in the next one.